good day in trade. Is this FI interest coming in? We'll have to wait and see. From the day's highs of 23710, you are very, very close to it right now. And if you're wondering what is driving the markets, it's all about the banks. Pull up the heat map and we'll see the strength coming in there. The banks on a different kind of trajectory. Private banks over here. The entire space really. Look at the top 5. Top 6 counters. Shriram Finance up about 3%. Axis, HDFC, ICICI Bank, HDFC Life, that entire bucket of BFSI really pulling its weight today. SBI not too shabby at all, up about 1.5%. So banks are doing well. On the IT side, Tech Mahindra, Wipro, Infosys all up in the green. So if you look at it, and we'll just pull up Nifty contributors, you have more red than green. But it is the heavyweights really pulling their weight. And when an HDFC bank wakes up, then the market really pays attention. That could be the Bernstein note on HDFC Bank, which sees it's fairly valued and then the pain points are over. So that's pretty much the story there. Quickly, let's pull up the advanced decline ratio before I bring Hersh in to give you a sense of what's happening in the broader markets. But suffice to say that after a good start and a very middling midday trade, you are still seeing the declines over the advances. So the broader markets perhaps not showing the kind of excitement that the Nifty is showing. Is that the case, Hersh? That this is more about private banks and HDFC Bank, which is bringing all that strength to the table?
Yes, it seems like the heavyweight has finally started to move, it seems. And this is not a move from 1450 to 1650. This is a move from 1650 to 1700 plus that we are seeing on HDFC Bank. Of course, if it holds, that's really the key question. But the move is nonetheless extremely strong, 2.5%. And you know, most analysts that I speak with, especially with regard to private banks, they believe that the market caps are so large in this space that it's that unless some serious money comes in, it's difficult for banks to move like this. Not sure if that serious money has come, but banks have certainly moved.
And which serious money? Look at the Bank Nifty today. The whole story is about the Bank Nifty. So Bank Nifty doing really well. And remember, Bank Nifty hit an all-time high as well in trade. Nevertheless, what about the broader markets, Hersh? Because that's where the interesting story and the pockets of interest lie today.
Yes. Last quick comment on the bank itself. 52,500 now. You know, till last week, Tamanna, the question was, can the Nifty Bank hold above 50,000? We are well past it, and hence it seems that you know, those woes are behind us, at least in the medium term. At least that's what it seems. But anyway, plenty of names, Tamanna, in focus, and you know, let me pull up some specific ones. Far and few in terms of newsmakers were at that time of the quarter where you know, Q1 results right on the anvil. So maybe the focus will shift. But you have something like an Amara Raja literally tearing away. This one has been a 2.5 bagger over the last 12 months. So clearly a stock in focus. New strategic technology collaboration, and the stock is up and away. Imagica 2 is up you know, almost 3%. Malpani Parks and Madhya Pradesh is what they're set to buy. They're also set to invest 150 crore in that company. Now the other one is Crystal Integrated. Now this one came in yesterday in terms of the note. It was an initiating coverage note on Crystal Integrated by Nuvama, almost offering a 70% upside. Stock is up 7%, target price being 1369 for viewer reference. The other one is you know, is Zomato. And I want to cover Garden Reach as part of the whole defense pack, which is not buzzing, but Garden Reach seems to be up and away. So let me put that out of the way. 13.5% higher, that one. Zomato, on the other hand, we had Process, which has valued or come out with Swiggy's numbers or indicative numbers with regard to GOV and the like. And the numbers of Zomato look far stronger. And therefore, we have a couple of notes, in fact, more than a couple of notes on Zomato, including the likes of a UBS giving it a thumbs up, 250 target price. So plenty of upside from here, and a CLSA also giving it a 248 target price. So 24 to 25% upside from those two top brokerage houses. I want to quickly also mark out some other buzzers within the mid-cap space. HDFC AMC within that financials pack, 3.5% higher, the very strong move. PB Fintech also reversing those last couple of weeks where it's been fairly quiet. It's up almost 2% in trade. I want to also highlight the entire realty pack. That one is up and away in, or rather not doing well at all in trade. That's one pack which is underperforming, and quite sharply you have Macrotech, Oberoi and Prestige, both all of which are down 4+%.
So a lot of moves there taking place on the upside and the downside, but like we said, it's all about the banks, really. And HDFC Bank is the star of the day, the stock of the day. Even though Amara Raja has had an absolutely fabulous morning, but when a big giant like HDFC Bank moves, it's when the market really follows through. Aditya Agarwala joining us this afternoon. He's Head of Research and Investments at Invest4Edu, and Dharmesh Kant, Head Equity Research at Chola Securities with us. Welcome to both of you, and thank you so much for joining us. Aditya, let me begin with your take on the Bank Nifty as well as the Nifty.
Good afternoon, Tamanna. Good afternoon, Hersh. Thanks for having the show. It was due, if I can put it that way, because Bank Nifty had underperformed big time, and we knew the moment it started to trade above that resistance of 50,000 and then successfully managed 51,000, it was a matter of time before we scaled past 52,000 as well. As we speak, Bank Nifty is trading at day's high point of the day, and I believe it can scale closer to about 52,800 and then 53,000 as well. Yes, it has room till 53,000 on the upside, Tamanna, and we just seen a couple of days of rally in HDFC Bank. It's yet to break out into an all-time high territory. Mind you, it hasn't yet done so. So the moment you see an all-time high on HDFC Bank, it can again add on another 10% from that point of time. So you can see another extended rally in Bank Nifty as well, as we all know that HDFC Bank is the heavyweight. And along with that, add a few names like an Axis Bank, which still looks strong on the charts. And the PSU lot hasn't participated yet. So I think the banking segment and the NBFCs are in a good spot, and I think so there is still room on the upside for all of them to play the catch-up play, and most of them names I think so will look very strong on the charts and is likely to continue its up move. While talking of Nifty, I think it will tag along the Bank Nifty for sure, because again financials are heavyweight on the Nifty, but I think on its own it might just face hurdles closer to about 23,800 to about 24,000 odd levels. IT is looking decent at current levels. I think so it can also participate in the rally. But apart from that, it's just a sector-specific rally that we are seeing, and that is likely to continue. In fact, if you take a look at the last couple of weeks or maybe 3 weeks, I can extrapolate it to, it's more of a sector rally that we are seeing, and there's a churning that we see from one sector to the other. And right now, banking is in focus, and that is likely to continue, I think.
Right, so since you made that comment on HDFC Bank, and you're saying if you see an all-time high, another 10% from there, what would you do right now, Aditya, at these levels? Is this a buy for you?
Oh, absolutely, Tamanna. Stay put if you had it. If you don't have it, if you missed out on the rally, go ahead, buy the stock. Don't listen to anybody. Just listen to your heart. You know, HDFC Bank, you're not going to go wrong too much there. Even if you want to buy at current levels, look for a target of at least, I'm looking at 1930 on the upside. And once 1930 is taken out, 2050 something that I'm eyeing next. And if I have to give a stop loss, maybe 1620, 1630 will be a stop loss.
Right, Aditya. Let me switch over. Dharmesh, what's your sense? We're at all-time highs now. Where to from here, and how do valuations look? Is it time to be cautious?
Yeah, good afternoon, Hersh. Good afternoon, Tamanna. I mean, it's always, for last few months, if you look at the market, it was always a time to be cautious, but the texture of the market has been a newer highs. Amidst sector rotation, every sector is again moving to a newer highs. So, one week you have banking sector making a new high, the other week you have auto sector making a new high. And this is the trend which is happening. If the last 7 months, if you look at the market, corrections have not lasted even 2 or 3 trading sessions, and immediately a newer highs was into the offing. In this entire scenario, what the analysis which we have done, what we found out was it's a pure liquidity play. And this liquidity boost is being provided by the retail sector, either through a direct equity route or through a mutual fund route. So every day, cash deployment is coming heavily into the play. However, from the institution side, we are not finding much of a business coming into play. I mean, we have multiple empanelment with FIIs, so order flow is very, very slow out there, not much happening out there. And valuation-wise, yes, it's definitely stretched. I think next 15 days would be very critical because monsoons have been at the lower end for the month of June, but the forecast suggests that next 15 days would be good enough to take care of the deficit of June. If that happens, then again, I think this continuity of liquidity flow and your highs will be there. It won't fizzle out. But if that does not happen, then you would be totally looking at a different landscape of the market post say 15th of July, before the budget even.
Okay, Dharmesh, specifically private sector banks, your views, which one do you like the most? What's your top pick within that space? Because that one's really leading the charge today. And anything on HDFC Bank?
Yeah, definitely. I mean, the last couple of weeks, we have seen good traction coming back into the banking space, and that too particularly into the private sector banking space. There, I think ICICI Bank offers the maximum juice for the upside. I mean, fundamentally, if one has to pick on a relative valuation metrics, ICICI Bank looks the best to me. It's a top pick followed by a IndusInd Bank. HDFC Bank, I would give it a skip just for the fundamental reason that I don't see the AUM growing by more than 12 to 13% for the next couple of years. At the same time, they are very hard pressed on the CD ratio, which is very critical, and RBI governors time and again pointed out for that ratio to come down. I mean, 80-85 is where they are looking for, and there ICICI Bank stands a good chance. It's only at 83, whereas HDFC Bank is 104. So very less elbow room for it to get into the growth opportunity. And it's just a trade, I think, which is playing out in HDFC Bank. And ICICI Bank, compared to the basket, looks a better bet even on the valuation multiple, followed by IndusInd Bank. Both are likely to clock a AUM growth of 17-18% with NIMs intact.
All right, so banks look exciting. What else looks exciting? Amara Raja is the stock of the day. It's a wonder run after the company's arm has inked a licensing pact with GIB Energy X. Now, what is this company? Why is this a big deal? And why is Amara Raja seeing still an 18% run up? Puneet is joining in to put this in perspective. Yes, Puneet.
Yeah, thanks for that. So let's start with GIB Energy first. Now, this is a joint venture between Gotion, which is a Chinese entity, as well as Inamdar Batteries. Now, both of them have been collaborating since quite a while now. And within this agreement, Gotion will be licensing its EV battery technology to Amara Raja. This will be for cell technological management as well. This will also ensure any kind of integration of Goshen's global supply chain with that of Amara Raja as well. Now, this is a key contention with, the management has been mentioning in the conference call as well, because the raw material for these lithium-ion batteries has been scarce, and, we have been seeing over the other companies globally also have been struggling with this as well. So this is one of the key positives which Amara Raja will be getting. It will also provide access to the full cell technology to Amara Raja to make these EV batteries right here in India. When you look at why is this significant for Amara Raja when we move forward, apart from providing, the cell technology, it has also said that it will be fully complement to Amara Raja's efforts into operationalizing the manufacturing facility that it's setting up in Telangana. This will be a 9,500 crore investment that it has been doing over the last 6 to 8 months, and the expected commercialization of the same is expected in FY 2026. Now, partnership also, will be with someone. They mentioned that they want to invest and have the next level of technological innovation also taken care of, and with a global company such as these two, that kind of gets ensured as well. The supply chain we spoke about, the difficulty that others have been obtaining, and a tie-up like this will obviously benefit that. Now, one of the key comments that the management has said that India is very key market. They can absorb the technologically very well with partnerships such as this, but it does not currently have that kind of ecosystem. And for the last couple of conference calls, the management has been highlighting that they've been in advanced talks for such a partnership which has come right now. The other important aspect is on Innobat, which when we move forward, we look at that. Amara Raja currently has a stake in Innobat as well, which is one of the JV companies. The stake is now at roughly 9.3%. They've invested roughly 30 million euros. in this particular round. In June 20th, they announced this particular another roughly 4.88% of acquisition of stake. Now, why is this important is that this could be a multi-year partnership going forward as well, since they have an equity stake in one of the JV partners as well. Finally, when we look at the Gigafactory in Telangana as well, which we spoke about, 9,500 crore outlay, and this will have a 16 gigawatt of cell capacity over the next 10 years. Do note that this is much higher than what of Exide, which is apparently around the 12 gigawatt range over the next 5 to 6 years, when it will be fully operational and commercialized as well. The phase 1 of this project is expected to be by FY26, and the total outlay of 9,500 is also higher than that of Exide, which is the listed peer of roughly 6,000 is what they are investing. I just want to make a small comparison with that of Exide, of where is the revenue picture of Exide as well as the other metrics to compare with when we move forward to the next one. Sales of Exide is roughly at the 16,000 crore mark for Exide. When you look at Amara Raja, it's around the 11,000 crore mark. If you see the margins here, that's the key contention. Amara Raja has much higher margins, much better operating leverage as well. On profitability as well, it also augurs very well for the company. When you look at the market cap, and here is, this is of course a number which keeps changing, but we're just trying to give a rough range of the market cap. Exide is upwards of 40,000 crores. Amara Raja is going towards the 30,000 crore mark as well. And when you look at the current PE in the next slide, we will see that the current PE of someone like Exide is around the 51 to 57 times the current PE, while for Amara Raja it's around the 28 to 31 times. So definitely when you look at the valuation of the current picture, is much more, it favors Amara Raja. The current PE FY26, Amara Raja also scores very well on that part. Plant capacity is, of course, depending on the total of, this is for industrial capacity only. But overall, just to sum it up, this partnership was very key for Amara Raja. Now, the only thing which was there is their OEM partnerships going forward. Exide already has that with Hyundai. Mahindra & Mahindra has tied up with Volkswagen. Tata has with Agrata. So, in all, we'll see that, how can this eventually be to revenues to the OEMs as well going forward. Back to you.
Well, excellent, Puneet, thank you so much for breaking that down for us. One more key piece that one would have to factor into valuations, just for viewer context, is Exide owns Exide, or used to own Exide Life, and currently owns a 4% stake in HDFC Life as well. So maybe those valuations slightly on the elevated side, because it owns a part ownership in HDFC Life, roughly 1.5 lakh crore, and therefore 6,000 odd crore in terms of market cap straight to HDFC Life. Of course, need to discount for holding company, etc. But let me go straight to Dharmesh. Dharmesh, these two battery makers have been on a tear over the last 12 months. Puneet's just broken down the fundamentals for us. Talk to us broadly about which one do you like. Of course, margins, Puneet very correctly highlighted, Amara Raja better than Exide. Even valuations, Amara Raja better than Exide. What's your sense on this entire battery play, and how are valuations in general looking at this point?
I think valuations in general, a bit stretched definitely, but it's a concept and theme play which is being out there on the offering, because EV, if it picks up, and the way the vision is that by 2027, every new vehicle sold has to be EV in India. So going by that metrics, it's a multiple times kind of a growth we are looking at, not in percentages, but in the number of times the EV batteries is likely to be sold into India, be it, MSCV or CV or passenger vehicle or the two-wheeler, three-wheeler, everywhere you will be finding this kind of a sourcing. And what Amara Raja has done it has put the things into place for this Gigafactory corridor, because you need the tie-ups, the technological tie-ups which they have done. You need the logistics supply chain kind of a know-how which again they have done. And you need the raw material, which China has the largest resource. So everything is likely to fall into place for them. So on a likewise line by line comparison, if you look at, so Amara Raja scores ahead of Exide, even in the capacity expansion which they are talking about. So there stands a chance, and I definitely agree. It was a very solid point which you pointed out, that the investments which Exide has in other companies, if you break that out, then the difference between the valuation of Amara Raja and Exide will narrow down to around 20% kind of a stock price kind of a gap as of now. I think Amara Raja is likely to catch up with that, and this theme is here to play on, because there's nothing negative. If you look at the balance sheet of Amara Raja, it's a very clean balance sheet. very strong cash flows, 14% kind of an ROE, whereas Exide has an ROE of only 7%. So a huge differential out there. One can play it as a basket buy, having say 65 to 70% weightage to Amaraja and 30 or 35% weightage to Exide. But these two stocks should be in your portfolio for next 2 to 3 years. I mean, definitely that's the future.
2 to 3 year portfolio hold is what you seem to be suggesting. But just in terms of the valuations as well, when you're looking at 3 years forward, the valuations taper down dramatically. From 50 times, it's coming down to around 25 times for Exide and around sub 20 times for Amara Raja, if I saw the data correctly, which Puneet had put up. But let me come to you, Aditya. What's the sense like on two of these battery makers on charts? And what should one do at this point? Amara Raja almost 20% up now.
Harsh, I think both the stocks have rallied significantly. Maybe Amara Raja has caught up more after the election results because of its own reasons being present politically in South. But I think overall, if I have to pick one stock now, it has to be an Amara Raja battery because of the fact that I see more room on the upside as far as the Amara Raja battery is concerned. Aggressive buying, I would not recommend in both the stocks because they both are sitting at overbought levels. So a correction of 5 to 6% here and there cannot be ruled out in both the stocks. But then, if I have to pick one, it will be Amara Raja batteries looking for a target of 1700 on the upside. On the downside, immediate support is at 1550. So somewhere the risk to reward is not in favor of going aggressive long in both these stocks. Exide too, I would wait for maybe a minor dip closer to about 540 to about 520 on the downside to initiate a fresh long.
All right, so that's a story about Exide and Amara Raja. But the other sector in focus today is the telecom sector. The spectrum auction is on, and all eyes on not just Vodafone India, but actually also Indus Towers. Reliance Jio is one of the largest bidders, followed by Bharti Airtel and then Vodafone. How does this all pan out for these companies? Balaji Subramaniam, Vice President Research at IIFL Securities, joining us for more on this. Balaji, great to speak with you on NDTV Profit. Let's just begin with the impact and what you're looking for when it comes to the outcome of the spectrum auctions, especially when it comes to Vodafone Idea.
Good afternoon. Thanks for having me on the show. I would think that the current round of spectrum auctions are, probably a business as usual kind of auction. Nothing big bang like what we saw a couple of years back when it came to 5G auctions, which set the ball rolling as far as 5G rollouts in India are concerned. This is more of a business as usual auction. Of course, companies like Bharti Airtel and Vodafone Idea also have some of their past spectrum which have expired, and they would be looking forward to renewing those. But I would expect a fairly muted participation in this auction. The government has put spectrum on the block worth around 96,000 crores at reserve price. I would think that, as far as the final outcome of the auction is concerned, maybe around 12-13 crores worth of spectrum is all that will get sold. So that is what I think. And Vodafone also will probably, opportunistically participate in a few circles where they have renewals and where they need some extra capacity for data. So, nothing big over there. My own sense is that Vodafone Idea would probably spend close to around 1,000 crores in these auctions.
So what do you make of the muted reserve prices we've seen so far, Balaji?
See, I haven't seen, we have to wait for the daily report to come out to see, exactly what all bands in what all circles have received bids. But I would think that, I think over these years, the auctions themselves have been becoming more academic because there are only 3 serious bidders, or rather 2 serious bidders, because Vodafone would probably, has been in recent years participating only, in terms terms of getting the bare minimum spectrum. So in a sense, whatever reserve price you set as a DOT or a TRAI, the same becomes the clearing price. So I would say, rather than auction, this is more like, you put up some supply and you decide a price, and telcos pick up whatever spectrum they want. So, that is what I meant when I said, these the reserve prices are.
So that's the demand supply mismatch. But just talking about Vodafone specifically, you talked about it in the context of what's been happening in the last few years, and they just pick up the bare minimum. Do you see that changing? Is that something you'd watch out for?
See, I think they would be going by, the earnest money deposit data that came 1.5 months back. I would think Vodafone probably will will participate in an opportunistic manner. So nothing big, because, you have to keep in mind that they also have a fair bit of spectrum, which they have already bought. And that is one of the reasons why their debt went up in the first place. A lot of that spectrum can be refarmed for 4G and subsequently 5G as well. So I think, to that extent, their requirements for spectrum are also low, unless, you are thinking like Reliance Jio and talking about offering 5G standalone network.
All right. And, Balaji, talk to us about, your key picks in this space. Would you play it through the three B2C companies, or would you prefer something like an Indus Towers, which has rallied very well? What's your sense? And also, I want your quick input with regard to ARPUs. Do you expect those to improve dramatically in FY25? What are you building in?
So I think one of the reasons why the sector has been in favor is because of anticipated price hikes, in the very near future. So my sense is that, probably one can see a 15-20% price hike sometime in the next few months, and some bit of that will, clearly flow through as far as FY25 ARPU numbers are concerned. That is why all telecom stocks, be it Vodafone Idea, Bharti Hexacom, all of them have remained firm in the last 2-3 months. So I think, whenever the tariff hike, the event happens, the stocks should stay strong. And of course, the other thing to watch out for is what happens as far as the curatory petition on the AGR case is concerned, because that has been there in the Supreme Court for a few months now. And if there is some favorable verdict that is coming Bharti's and Vodafone's way, that would also be a positive, both sentimentally and in terms of the reduction in liabilities. As far as my picks are concerned, I would think that at least in when we look at it on a fundamental basis in terms of valuation, a lot of it is already there in the price. But I would not expect a material correction as well, because as I said, there could be a flurry of some of these good news coming in. As far as Indus is concerned, I think there I still see some room for upside. Now the overhang around Vodafone sale is largely done. Bharti is close to the fag end of its rural 4G rollout, which means that after that high capex period is over, Indus also should see some improved cash flow generation. And considering how Indus's dividend payout policy is, which is 100% of its FCF, I would expect Indus to reinstate dividend maybe sometime in the next 6 to 9 months. So I would, see all these as positive catalysts for Indus.
All right. Thank you so much, Balaji, for breaking that down for us, quite in a detailed manner. Great perspective, and good having you here.
Thank you.
I want to quickly move on. We're going to slip into a very short break. On the other side, we'll get you the latest from the derivative space as always, and the rationale behind Raymond, because that one is up and away in trade. Stay tuned.
Welcome back. Markets steady, and you're seeing the usual suspects really doing well this afternoon. Amara Raja we spoke about, Garden Reach, Raymond, one of them as well. But what's the action on the F&O side of things? Agam is standing by for more on that. Agam, we're looking very comfortable to breach 23,700 at some point. Bank Nifty and Sensex also very close to or at all-time highs. What is the setup looking like?
Well, it's another day of milestones, Tamanna. So we start off with the Nifty, of course, as you mentioned. Well, it did hit 23,700. It's taken a step back, but on an intraday basis, of course, a lot of positive cues coming in. And we're actually looking at, a good 8% increase in open interest. And remember, this is after 3 straight days of considerable unwinding coming through. And this is the June futures, mind you, because we are going to see the monthly, expiry coming in on Thursday. Usually what happens is that on such days, we actually see unwinding. But today, in fact, we are continuing to see fresh longs, which means only one thing, that at the moment traders are still expecting strength over Wednesday and Thursday. Now let's come down to the Bank Nifty. Today is the penultimate day of the monthly expiry for the Bank Nifty, and it has made a new life high today. What does that bring tomorrow? What does that mean for tomorrow? As you can see, 7% increase in open interest here as well, and once again following 3 straight days of unwinding coming through just one day before the contracts expire. This also indicates that traders for now are pushing in longs for the Bank Nifty as well. Now, today is also the day where we have the Fin Nifty expiry, and I'm going to talk about that in just a bit. But before that, let's talk about the options market in the Nifty. Now, naturally, since the Nifty moved higher, we saw a lot more puts writing. That's indicated by the red bars on the chart here. When it comes to your overall open interest distribution picture, 24,000, where there was a lot of call writing, I reckon at least some of it must have unwound because we are within striking distance, less than 1.5% away from there. And we can't exactly rule that possibility out that Nifty could in fact hit that mark over the next couple of sessions. It's very much on the charts. It is a probable event. And of course, on the lower end, seeing more and more traction on relatively higher strikes in terms of puts. So this time around, we now have action in the 23,500 and 6,000 strikes as well. Now let's talk about the Fin Nifty. And of course, as we know that this one has also made a new life high, we're now starting to see a lot more coming through around the 23,500 mark. This is where we've seen calls and puts written. Most likely it is going to expire around that. It is a level that at least a lot of writers weren't expecting in the morning, because we did have a lot of writing around 23,300, 400 calls, but all of them have unwound and now likely to see that close around 23,500. Finally, coming down to stocks, and well, more gainers than losers, actually not in the top 5, but Colgate and InfoEdge looking at more gains. Not too much traction on the downside as far as some of your losers go. Among stocks which saw unwinding, again, short covering for JK Cement and Gujarat Gas, Navin Fluorine and Coromandel International continue to see unwinding. All in all, a good day of trade, certainly a very good one for the private sector banking space. And the question is, can this strength continue and hold on for tomorrow's monthly expiry?
Absolutely. The stage set for a very exciting and dramatic monthly expiry, if I may say so. So you're going to see a big movement perhaps on either side. Let me come to Aditya and Dharmesh on one of the stocks that has been in focus. We've also spoken to the management today, which is Shriram Finance. Dharmesh, you talked about the private banks very constructively, but specifically on Shriram Finance. What is your view there? We're seeing a solid upside. Do you think in the broader sort of pack, it's a good pick?
Yeah, Tamanna, we don't cover Shriram Finance
Okay.
specifically, so I won't be able to comment on that. Apologies for the same.
No issues at all. Aditya, what about you?
It's a very strong looking chart setup, no doubt about that. And look at the volume, Tamanna, in today's up move. I think it's going to continue its up move looking for a target of at least 3,100 on the upside. On the downside, 2,900 to about 2,930. These are good support levels. So I think if somebody is looking for a fresh entry, not a bad take within the NBFC space. One should definitely explore Shriram Finance as well. Along with that, maybe a Muthoot Finance, if I can add to that name. That is also looking very interesting to me. It's a fresh breakout on the charts, and I think so it has more legs on the upside. Can definitely scale to levels of at least 1950 on the upside.
Shriram Finance is one of the top gainers on the Nifty. We spoke earlier today with Umesh Revankar, Executive Vice Chairman, and he said that the company may go faster than the 15% growth guided depending on economic activity. Listen in.
As far as the tier 1 capital, we are at 19.4. We were at 19.4. Post this transaction completed, this transaction is likely to complete in this financial year. It may add to around 1% additional. It is not really going to add big, but 1 to 1.5% additional. That means it may go back to around 21% by the year end for us. And that helps us to grow for another couple of years very comfortably. And therefore, we felt that since we need not raise capital again within next couple of years, this transaction should go through. And we may grow a little faster depending upon the economic activity.
Look at the kind of up move we've seen this afternoon in Shriram Finance. In fact, Hersh, you spoke with the management today, and that's a slice of the conversation that you've had. Any indication you got of the kind of optimism we're seeing with the stock today, especially in terms of guidance?
So when he spoke of growth, Tamanna, he was cautious to hike his guidance of 15%. For context, they've grown at 20+% in FY24, so the base is slightly higher. But nonetheless, on growth, he was cautious. But what he suggested was 3 particular pockets. One, MSME, the other is PV, and the third is gold. And these 3, he said, will grow at 20% plus in FY25. He was very comfortable saying that. He said that they'll continue to focus more on PV, and they believe that the opportunity in PV is large. Now, we also spoke about Shriram Housing Finance, because they're going to entirely sell out of Shriram Housing Finance. And this will, of course, shore up capital. He said there will not be any fresh equity fundraise required, or at least for the next 2 years, despite the slightly higher growth expectation. And this one, as a stock, has been on an absolute tear. And, you know, of course, he linked it with economic activity, the growth itself. But the sense that I got was he's far more bullish than he was willing to give away. Also, agri and rural is something he spoke about. Rainfall expected to be better. Agri is expected, or rather rural India is expected to see better demand over the next 6 to 12 months. And he believes that Shriram is well placed in that space, because a majority of their branches are in those regions, in the rural and semi-rural kind of belt. Of course, just in terms of general guidance, just want to kind of cover this end to end. They're expecting around 11 to 12% growth in CV. Personal loans has degrown. Gold loans, they're expecting to grow in terms of branches, 500 branches per year going forward. Margins, they're expecting at 9% going forward as well, fairly comfortable with that number. And credit cost of 2%, they're comfortable with. NPA ratios to come down a little bit more, from 6.4%, GNPA is expected to come down to 5%, and NNPA also to 2.5%. So largely that's how they're playing. Stock is, of course, up and away, very close to that 3,000 mark now, almost 4%, top gainer on the Nifty.
Yeah, fantastic run-up for Shriram Finance. And the way all of the BFSI pack is just... CLT has approved the group entities demerger, 6% up on this. I mean, ever since IRAS put out the note, cautioning shareholders against Raymond, the stock has just been on an up move. So that's a bit ironical there. But anyway, Mahima joins us with the details of the rejig and more. Yes, Mahima.
Right, Tamanna. So, as you rightly mentioned, NCLT has now approved the demerger and the amalgamation for Raymond, demerger of the lifestyle business and amalgamation of its consumer trading arm. Now, in terms of the swap ratio, well, shareholders of Raymond Limited will receive 4 shares of Raymond Lifestyle for every 5 shares, and for Ray Global Consumer Trading, they will receive 2 equity shares for every 1 share. Now, in terms of recent developments, well, Raymond has been really bullish in terms of the real estate segment. They've recently won a contract in Bandra East, which has a revenue potential of 2,000 crores. We also recently spoke to the management of Raymond, and they are expecting that revenues from real estate and the engineering business will contribute almost 45% to the total revenues by FY29. At present, their segmental breakup is lifestyle business contributes around 68%, engineering around 15%, and real estate around 17%. In terms of their Q4 performance, their revenue improved by 23% YOY, EBITDA was up around 38%, and margins have improved from 17% to 19%. Now, in terms of their net debt, they sold off their FMCG business in FY24 and have become net debt free. And lastly, they've also acquired MPPL, which is foraying into aerospace, defense and EV components in FY24. So this is the overall roundup of what the company has done in FY24, and of course it's buzzing in trade today because of the NCLT approval.
Okay, in a way. In fact, NCLT approval came in at like 250, if I'm looking at the time right on exchanges. Stock has been up and away since the morning, Tamanna. So, of course, NCLT approval adding to that, but seeing very good strength in Raymond.
I don't know if the NCLT approval was something which was unexpected. So, if it's just another reason or an excuse, or so to speak, to continue that move. I just want to get a view from Dharmesh on that very quickly. Dharmesh, are you seeing any fundamental reason for the run-up in Raymond or anything that's exciting you fundamentally on the company?
I mean, fundamentally, the company has done a solid business rejig, and verticalization of the businesses is definitely going to work well. And I mean, the entire management reshaping and the way they are taking up businesses have been working well. The only point is the ethical issues surrounding, the promoters, and that is the reason why we have stayed away from recommending this.
Stayed away from Raymond because of you're talking about the divorce. That's concerning you in terms of the company.
Definitely, yes.
Okay. Well, at least enough investors out there who are interested in Raymond and don't have those concerns. Aditya Agarwala, your take on Raymond on the charts?
There is a bit more upside, Tamanna, without a doubt. 2,900 is something that is stiff resistance for the stock. So if you already own the stock, maybe around 2,900, you can take a fresh view as to what to do. Beyond 2,900, I don't see an immediate up move in the stock. A fresh buying at current levels, I would likely avoid doing that, sitting in extremely oversold levels. And plus, as I mentioned, 2,900 is a stiff hurdle for the stock as of now.
Okay, that's the story on Raymond. The other one which we've been tracking is Zomato, and Hersh, that's something that you have also been looking at very closely. I found the whole genesis of why Zomato is in the news quite interesting today. Prosus has put out its annual report and talked about its valuations of Swiggy, in which it has a significant stake. And looking at that, you've had a host of brokerage houses come out and say that, hey, actually, if you go to see, Zomato is doing better than Swiggy, its closest competitor, and hence that kind of run up today.
Yeah, and relative valuations. And you could also potentially, Tamanna, see that Swiggy will eventually get listed and therefore become the benchmark for valuations for Zomato as well. So the guess is that that's how it should ideally play out, as and when the Swiggy listing should come. It will. In fact, Zomato will follow in terms of valuations, and you'll have a duopoly anyway in the space. You already have that, and therefore both players will be listed, and one will follow the other in terms of valuations. And basically, the hypothesis is that if Zomato is doing far better on most metrics than Swiggy, then that makes for a good case for Zomato. In fact, we caught up with Dinshaw Irani of Helios Capital Management earlier in the day and asked him about the industry, of course, this particular industry, and whether one should invest in such platform companies even in general, some of these new age tech companies. Listen into a slice of that.
One thing that you be very clear about in these platform companies is that globally they should be established model in this particular space, right? And we've seen that. And secondly, in the food delivery business, it's the number one player is always has a upper hand over the others. Look at the US, for instance, DoorDash, 60-70% of the market share being controlled by that one company. I'm talking about food delivery. Or you look at China, Meituan, again, some 70-odd% being controlled by that one particular food company. The second player is a marginal player, around 20-odd% in both the markets. So it's obvious that in India also, Zomato was probably the lead player who came in the space. And I'm not saying that they'll go to that level, but Swiggy is a tough competition to beat out here. So our belief is that India, the market is good enough to have two players totally growing at a very fast clip. I mean, you're talking about what right now? I mean, 2-odd crore regular food delivery guys who are using that app and stuff like that, which is nothing. It's just not even the tip of an iceberg right now for the potential that these guys carry. So you got to look at the potential too. And the fact is that path to profits is very clear for these guys. I mean, they just have to, capitalize on rather encash on some of the delivery modules as such. And that's what I think Zomato's done very well as such. Swiggy is still having a problem because Swiggy is having some losses, still showing some losses going forward as such. So that way. And one more thing that you should keep in mind, Neeraj, is that in the case of Zomato, Blinkit is a separate platform altogether. It's not a part of the Zomato platform, right? They're two different platforms. While in the case of Swiggy, it's one single platform for the Instamart business. So still it's not clicking that much, means that Blinkit is really getting a separate traffic altogether. So that's what's an exciting other opportunity, I think, for Zomato to come forward. That's why, all in all, we think we got a winner in this. And we'll stick on to that as long as the growth is exciting out there.
All right, Aditya Agarwal and Dharmesh Kant with us. Dharmesh, I'm sure you have some views on Zomato. Do you think there's more run-up, or is this now a little overdone, the kind of excitement on Zomato?
I mean, Tamanna, there is always a pocket of investors who chase, concept stocks and thematic stocks like Zomato and Swiggy and all. So the run-up may still be there. I don't doubt that run-up at all. The problem with me is I'm an old school guy and I really find it very difficult to, give a valuation multiple based on the top line growth of companies, which is equity funded. So at best case scenario, I mean, any hypothesis you do, these companies can generate in a best case scenario 2 or 3% kind of an operating margin. So that wafer thin margin would be there when for 2 crores to even they go to 40 crores kind of a customer base, then you can't make more than that kind of a margin in such kind of a business. So my concern is that, and the type of valuation multiple at that margin these companies are trading at, it would be more than 100x plus. The PE multiples would be like that scenario. So very capital intensive, very labor intensive. You need people to deliver, and again the labor laws and everything will fall into place very slowly, which will be again stringent. We have seen the type of bikes these guys deliver. They are not governed by any rules. There is no traffic rules for that. And eventually these things will come into play as the businesses grow. So I have my own set of concerns. So we are not writing any of them. New age, companies do, I understand, like PV, fintech and all, that's fine. But these business models are very, I don't think they will see the light of good profitability to justify the valuation multiples.
What about you, Aditya? On Zomato, I saw you smiling when I was asking Dharmesh about Zomato. So you're either very excited or very skeptical.
No, Tamanna, the thing is at 60, at 70, nobody was talking about Zomato. You asked the street, everybody was bearish on the stock. At 200, suddenly everybody likes the stock. It's just one of those kinds of stocks when at lower levels, nobody looks to buy. Okay, so coming back to Zomato, at current levels, what to do? There is still an upside to it. I don't deny that. 200, 240 is my target. Maybe with a stop loss at 190 on the downside, you can still be a buyer in the stock. But yes, to be honest, the The clear up move that you had in Zomato at 100 or maybe below 100 levels is not there anymore. And if I would like to allocate fresh money, it will be very limited money that will allocate in Zomato at current levels, maybe for a target 230, 240 on the upside.
Okay. So, kudos to those who at 60, but
40.
now enough.
Tamanna, 40.
No, since Aditya's story started from 60 rupees, 60 and 70. But yes, those from 40 to deserve a different category of an award.
5x.
But I think the thought that Blinkit has come in and been a game changer has also changed that story. I'm just looking at the flashes on our screen, and that's quite a milestone over there. ICICI Bank has crossed the $100 billion market cap. It's joined this elite club of companies in the $100 billion club. Includes RIL, TCS, Bharti, and of course HDFC that are now in that zone. So just astonishing what's happening with Indian banks. And at the end of the day, Hersh, when anyone talks about growth in the Indian markets, in the Indian economy, it can't happen without the financial system powering it. And banks, especially private banks, have been sort of sitting on the sidelines while it's all been about the public sector players. So, apna time aayega has definitely happened for ICICI Bank today.
Yeah, and in fact, ICICI Bank, if we can zoom out a little bit, maybe the last 2 to 3 years as well, has done phenomenally well. What a run it has had. From that sub 700 kind of number, it's gone to 1200, and even in terms of relative valuations, currently the most expensive bank in the country, and therefore and it's at a time when it's a especially for ICICI, it's a sort of a Goldilocks kind of a period, and the enormous returns it has given shareholders during this time, it's very solid, and it's good to see, because you want a good set of and a good set of financials to support the economy.
All right, so that's the story on ICICI Bank. Happiest Minds is the other stock in focus. It's in pain, expectedly, because there's been a massive block deal worth over 1,000 crores. Promoter Ashok Soota is believed to have offloaded 6% stake in the company. We'll of course wait for the final details. Rucha joins in for more.
Happiest Minds is under pressure today. Now, this is because the promoter Ashok Soota has raised around 755 crore by selling 6% of his stake in the company. Now, the stock is around 8% down in today's trade, and after this stake, the promoter will have around 32% stake in the company. Now, talking about the deal which has happened, the deal has happened at a price which was around 8 to 10% discount to yesterday's close. The details of the exact transaction will be known just during the evening today. Now, the stock has not performed well over the past 1 year. If we look at the stock performance, the company has underperformed the Nifty index by 36 percentage points and has given a negative return of 10% over the past 1 year. So this is all what we have on Happiest Minds, and is buzzing today because of the block deal by the promoter of the company. Back to you.
Right, Happiest Minds in focus. Let me take it to Aditya. Aditya, 10% down on Happiest Minds. Your sense at this point?
It's at support levels, very strong support levels. Hersh, 820, 800 is a strong support level. I'll not go ahead and sell the stock. Definitely no. If I'm a holder in the stock, if I already bought it, maybe I'll place a stop loss at 820 and continue to hold on to the stock and see how stock behaves next couple of trading sessions. If it holds on to 820, I think so it will scale back to levels of 920, 940 on the upside. I don't see too much of a selling pressure coming in the stock from these levels.
Okay.
All right. Thanks so much, Dharmesh and Aditya, for joining us today on the show. Let's start wrapping up what is turning out to be a very, very exciting closing session. We are 3 minutes to go and well above the 23,700 mark. I mean, I know we keep hitting new highs every day, so it becomes, kind of the same story, but nevertheless, astonishing run up, nearly 200 points up before we close off on the Nifty. And the strength in the banks is astonishing. Bank Nifty, yes, that's the hero of this afternoon, nearly 2% up. I just want to pull up the sectoral indices for a second before we go into the Bank Nifty intraday chart and take a look at what is happening there. Look at the finance index. So it's actually just not too much of a pool of stocks that are driving up the market. More reds on this side. PSC is hurting, realty hurting, metal, but all of that is not mattered at all because finance index and Nifty Finance up 2%, banks nearly up 2%, services and IT all up in the green. Let me pull up the Bank Nifty intraday before I get to the heat map to just give you a sense of what has been happening. And just look at that, Hersh. You are close to the highs over there on the Bank Nifty as well, 52,650. You've already crossed the 52,700 level at some point through the day and sitting very strong. I just want to pull up the heat map for a second to give you another perspective of how it is all about the financials. Shriram Finance, we spoke to the management today, very strong guidance, 4% up. Axis Bank, ICICI Bank has has joined the elite club and has crossed new levels on its market cap. HDFC Bank, of course, holding strong there. So bank, IT, both those segments really contributing. Bajaj Finserv is up there. So is Tech Mahindra, Wipro, Infosys, Kotak Mahindra. That's the whole story. On the losing side, though, you have BPCL, Aisha, Power Grid. So the PSEs are continuing to see a sell-off, but the private banks have come to the fore. And I think that's pretty much the story, even the broader end of the markets, isn't it, about the financials?
Well, absolutely. There's been a shift in trend, clearly visible on at least the benchmark itself. And the benchmark has actually outperformed the broader markets. If you can pull up the advanced decline. We'll likely see that somewhere midday it reversed and that reversal has kind of held up. There you go. And that's exactly what we're seeing even in the Nifty mid-cap and small cap. We can pull those in terms of where we are at 2/5% lower on the Nifty mid-cap. The small cap though holding in the green but just about by a wee bit. Nothing material there. Far and few. Of course, sectors we covered 40% of the Nifty 50 is the finance pack and therefore that one really lending support.
Yeah, it's sort of skewed the story there.
And IT, and therefore the others are getting eclipsed today, but there's plenty of pain otherwise, Tamanna, very visibly so. Let's pull up the BSE 500 as well, just to kind of cap this off. There we go, we've closed for the day. Amara Raja now 20% higher at close. Craftsman Automation also doing very, very well. On the back of the MOU signed. Raymond up 7.5%. It has been up all day. We've covered most of these on the show, so won't get into the specifics. LIC Housing is up 5% as well, nearly. Among the losers, lots of realty names, as you can see. A couple of, you have Bombay Burma, which is down, so holding company. And Happiest Minds is probably the top laggard there. So
Happiest Minds, I would say, is the block deal impact. Bombay Burma, I mean, people realizing that yesterday's run-up didn't have any real fundamental reason. But I think notable is what's happening with real estate. And I would be keen to see if that continues, that pain continues into tomorrow morning's trade as well as far as real estate is concerned. But we're closing on an exciting note, new records all round. But for now, that's all the time we have. From Hersh, me and the entire team, thank you so much for watching.